Hello, chart watchers, and welcome to this Monday, February 26th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we are getting off to another good start to the week. We got the Dow Jones Industrial Average up 221 points, the S&P 500 up 16, the NASDAQ up another 47, only about 100 points off its all-time high. NASDAQ's recovered most of those losses. Russell 2000 struggling a little bit on a relative basis, but does remain in this flag pattern, trying to make this breakout just a little bit above the 1550 area. 10-year Treasury yield has pulled back for a third consecutive day, back down at about 2.85%. Pretty weak new home sales report out this morning. We'll talk about that in a couple minutes. Volatility index now down at 16.38, getting very close to what I consider a big support area around 16. The XLK, which is the technology ETF, looking to make the breakout above its January high, almost moving into all-time high territory. You can see that the computer hardware index up near 2,500 trying to make the breakout, and of course, it's because of Apple. Apple's had this huge run-up over the past 2 weeks or so, and it too is challenging an all-time high. Transport's having a pretty good day today, as you can see, up above its last 2-week reaction highs, and it is being led higher by airlines and railroads, both having good days. And with that, let me bring in my co-host, Aaron. How are you doing this morning? Did you have a good weekend?
I had a very nice weekend, minus the Ducks tie of the Edmonton Oilers last night. And a loss to the Coyotes of all things, the very last place team, and we managed to lose it. But
isn't sports just great? I mean, you went to the Vegas game, so they go out to Vegas, play on the road against one of the best teams in hockey, and they win, and they lose to the Coyotes. I mean, that's just the way things work.
I'll tell you. But we're in third place in the division. But enough hockey. I know everybody gets tired of us talking about hockey.
Yeah, hockey's fine. I enjoy talking about hockey this time of year because I'm still, very
still are good.
I'm still bullish because it's regular season.
Right.
So, get into the playoffs and we're done. Of course, I'm a Capitals fan, so that though, I don't want to get into. We're getting too close to the playoffs now. I can't talk too much hockey anymore.
There you go. Hopefully, we're in it. I don't know.
Yeah. So what do we got going for today?
Yes. Let us see. Well, actually, for this week, tomorrow we have Bill Shelby coming in to do an everything stock charts segment. On Wednesday, Mark Chaikin is going to be here. He is the developer of the Chaikin Money Flow indicator, so that should be very interesting. And Mr. Wyckoff, Bruce Frazier, will be back with us on Thursday, so that'll be great. So this week's going to look pretty good here. Today, though, of course, we're going to start with our Monday setups, as we usually do on Monday. We have an earnings spotlight with John Hopkins later. And our 10 and 10, we're going to start with the symbol Visa, V. And so you can go take some notes on that. And finally, we're going to finish off with my DecisionPoint report. And I'll show you what's going on. And actually, I kind of disagree with Carl right now on a few things. So it should be interesting.
Yeah, that should be interesting because you all follow, a formula, don't you? I mean, how can you disagree?
Indicators. Well, I mean, the signals are mechanical, but our position and opinion and analysis of the market based on our indicators sometimes diverges. So.
Okay. All right, that will be interesting. Let's jump into what's going on today. First, I did mention the 10-year Treasury yield. You can see, actually, it's come down now, and it's getting that first 20-day test that we've seen in 2018. We got close in the first week of 2018, but other than that, we've been riding high in a pretty steep uptrend in the 10-year Treasury yield, but the last 3 days' weakness has taken it down to test that rising 20-day moving average, currently down 2 basis points to 2.85%. And that comes on the heels of a not-so-great January new home sales report that came out 10 a.m. this morning. 593,000 units. Market was expecting 640,000 units. And if we pull up the chart on the Dow Jones U.S. Home Construction Index, you will see that this is a group that while it was on fire in 2017, it is really struggling in 2018. I showed you some charts with Apple and technology and even the NASDAQ. Getting back up close to that prior high that we saw in January. Look at what's going on in home construction. We're getting almost no recovery, even though the market's been bouncing. Last 5 days, we've been down in home construction. And I think that even the recovery here was a little bit weak. We failed at that 20-day moving average, rolling back over. If there's one positive here, it's that as we get back down close to these recent lows, we should have a pretty nice divergence in play. So if the volume starts to weaken on the pullback, perhaps we will get a little bit more relative strength out of home construction. But for now, it is not looking very good. But overnight, we got off to a great start. Asian markets were strong. That carried over into Europe this morning. We saw most of the major indices in Europe doing very well. And then U.S. Markets jumped right out of the gate, and the gains have been holding. We can pull up the S&P 500. And one of the things I wanted to show here, and one concern that I had on this was if you pull up the Fibonacci retracement and just go to the recent high here and down to that low. Hopefully you'll be able to see this, but you can see 2742 is the, and maybe make it a little bit thicker there. But here's this 2742 level. That's the 61.8% retracement of this sell-off. So if you're bearish, that normally would be the area that you would see things turn back around. I wrote about this in the Chart Watchers a little over a week ago. I thought that, if the bears were going to grab control, it was going to be at that level because we had made up that 61.8% retracement, started rolling over. We actually had an intraday move that was above it, and then we came back down. We failed and came back down and closed below it. And you can see last week we did struggle early, but we had some strength at the end of the week. One of the things we talked about here on the show was it would be nice to see the market finish strong one day because we kept giving up gains in the final 2 or 3 hours each afternoon. Well, Friday we didn't. We actually came back up and closed really strongly. So if I get out of here and we look at an intraday chart, let's take a look. Let's first go in and look at a 10-minute 5-day chart. You can kind of see the last few hours. This was back on Tuesday of last week. And then, so that was a pretty rough last 3 hours. Here's the last 2 hours on Wednesday. And then, of course, on Thursday in the afternoon, you can see all the selling and the weakness into the close. But look at Friday. Friday came back up, and actually there was a lot of buying going on into the close on Friday. Then we gap up, and you can see right now we're up near the high of the day on the S&P, up another 18 points to 2765. So if you're counting on that Fibonacci retracement level to hold the market back, that is not working out so well right now unless we have a major reversal this afternoon. I'd have to see that first. I do think that things are starting to look up. We saw some leadership, a little bit of leadership last week from some defensive areas. The XLU, actually, let's go back to a daily chart. The XLU has been performing much better. We saw a really nice day on Friday, and then, of course, we had gapped up a little bit earlier today. But some of this I think could have been expected. When you look at the PPO, you can see a slightly higher PPO with lower prices. So that tells me chances are we're going to get through that 20-period moving average. You can see how we had been failing. As long as that PPO was pointing lower and below the center line, we were struggling to get through that 20-day moving average. But on this last move down with lower prices, you can see that the PPO actually held up. Positive divergence. This time we got through the 20 and trying to make our way for the 50. We've got some overhead price resistance just above 51, and we've got that 50-day moving average, which is just beneath 51 as well. So we've got some overhead resistance, but the pullback in the 10-year Treasury yield, if we go back and look at that again, we'll see a negative divergence. That is helping utilities in the near term. Here you can see the PPO rolling over as the 10-year Treasury yield was moving higher. I think there's a chance we go back below this 20, although probably the more likely scenario is we go sideways and maybe just consolidate, say, between 285 and 3. Overhead resistance at 3 is going to be pretty strong if we get into a longer-term monthly chart on the 10-year Treasury yield. You can see that the last major push to the upside in late 2013 failed right at about 3%. I think we got just a little bit above 3. It might have been 305 or so. But that's what I expect. I expect that this move is going to get us up into the 305 area, and then maybe we'll settle down and possibly even move back and test this rising 20-month moving average. But that would be a little bit more downside that we'd have to go through. The key here, though, to me is going to be this high, because off the long-term downtrend, here was your low, which we essentially have a double bottom in, and the reaction high here at 3 or 305. If we clear that I think the long-term downtrend in Treasury yields could be over. If we get it up to 3 and we fail there and come back down, then maybe we just consolidate for a while. But we've seen this downtrend in play for 35 years, going back into the early 1980s. So this is a pretty big deal as we get up to this 3%, 305 level. A few other things. I did want to just go back and point out, if you go into the member dashboard and then under reports and analysis on the left-hand side, I start most of my days clicking on the sector summary just to see what's leading. And I always look for the aggressive groups: technology, financials, industrials, and consumer discretionary. And you can see that with today's movement to the upside, four of the top 5 sectors are the aggressive sectors. And I find that to be very bullish, especially as we're clearing some key Fibonacci levels and so forth. I don't want to see the market turning into defensive mode as we're making some of these key breakouts. I want to see money rotating into offensive areas, and that's exactly what we're seeing today, which I think is great. A couple of stocks that I mentioned heading into February, so it had been about a month ago. I'm going to and we're going to talk a little bit more about seasonality on Wednesday, but I want to mention a couple of stocks. One is Adobe, because a month ago I talked about Adobe. It has such a strong history in the month of February and March, as you'll see, but February is where the strength starts picking up for Adobe. March is another strong month, and then even into April. This is a really strong 3-month stretch for Adobe. And if I pull up their chart, of course, this is one of the software companies. Check out this move recently, breaking out again to another new high when the market is not breaking out. This is what we talk about when we mention relative strength and so forth. So I think what's going on here with Adobe is very bullish, especially given that seasonal history. Now, if we pull up another one that we talked about, Priceline. I think Priceline also, this is one of the most remarkable seasonality charts. And you can see this one in February. Actually, even starting in January, the average monthly gains January through April is just simply astonishing. I don't even know how to describe it. 5.7% average in January, 8.3% average in February, 7.8% average in March, and 13.2% average gain in April. And this is going back over the last 20 years. This isn't just the last couple of years. This is 2 decades worth of seasonal performance that's just off the charts. And you can see that it's clearly the best time of the year to be in Priceline. And so if we pull up Priceline, you can see after some initial weakness in early February, it has come roaring back. And it's about flat now for the month of February. But I think when you look at this compared to some of its competitors like Expedia, I think it's pretty clear Priceline is the stock of choice in that group. I would not be at all surprised to see Priceline make another run up here for about 1980. Based just simply on its seasonal pattern, if nothing else. I do have a couple that I'm going to talk about, a couple of individual stocks, maybe a few more on Wednesday coming up for March that I think you need to pay attention to. But if you want to get a sneak preview, you can go back and look at my blog this morning. I did put a couple in there. And then finally, there were a couple of breakouts recently, so I just thought I'd mention those just so you're aware of them. Bloomin' Brands, BLMN, broke out last week. Sideways consolidation for a few months, made a really nice breakout, heavy volume. I think this 22.5, 23 level on a pullback would be very interesting. GTLS, this is Chart Industries, beautiful move at the end of last week. Look at that volume coming up to support this breakout around 55. So any pullback into the mid 50s would look pretty interesting on GTLS. And then finally, before I turn it over to Aaron for upgrades and downgrades, there was an earnings report that came out this morning. Copart, CPRT, really nice gap up, clearing this sideways consolidation. A lot of heavy volume coming in before earnings. So a lot of folks maybe getting some wind of maybe a strong report. And the company did report very strong results, 459.1 million top line. Market only expecting 434.6 million, so an easy beat there. Bottom line, 47 cents. The market was only looking for 38. So we got a beautiful breakout on the chart, and we've also got great earnings that came out this morning on CPRT. So very interesting there. And with that, I will turn it over to Aaron for some upgrades and downgrades today.
All righty, let's get to it. And you can hear me, which is nice.
That's always a positive start.
Yes. Alrighty. So here are the list of upgrades, downgrades that I'm going to look at really quickly today. I'm going to start with our downgrades. So let's get to it. This big for you. All right. So remember, these are downgrades. I didn't see a whole lot of potential, honestly, out of our downgrades, because a lot of times we do look for possible, ways to get in on something that's pulled back a great deal. But looking at this, we failed to close that gap. I think that's bad news. Of course, we broke below that rising bottoms trend line. We're getting ready to hit some important support, but I do notice the PMO did top off with this drop here. So might be interesting to watch what happens when it hits this area of support, but also notice the 50 did just cross below the 200, and that puts Albemarle on a long-term trend model sell signal. So expect bullish results, not positive ones. And as we can see here, we did get a 2050 negative crossover on Halliburton, which also is a downgrade today. I do like this rounded bottom on price right off of that area of support, and the PMO is not turned down yet on this one. So I would be watching that 2050 and see if we can't get price up above that. But there is some potential here. I think there are better opportunities, though, rather than this one. And another downgrade, we have Zebra Technologies. This one is so overbought. I wouldn't be getting involved in it, especially after a downgrade. Look at this weekly chart here. Yeah, it's been making quite the move, really quite a move. And we've now broken out even past the all-time high we had back here. So it's just too overbought for my taste. But if it's a downgrade, maybe we'll get a pullback there. I thought this one looked pretty interesting as far as an upgrade. We have a ascending triangle, which is a bullish formation. We do see the 20 has crossed below the 50s, and price is now coming right up against that 50-day EMA. So we'll have to watch that one closely. But you can see a rising PMO at this point, and that positive configuration. If we can get the breakout, I think this one has some good upside potential for BP. Dine Equity, DIN. Nice breakout today on the upgrade above this area of pretty strong overhead resistance. And I do have to say I like that, especially when we've got a PMO. It bottomed and got the sell signal and oversold territory. Granted, we missed a lot of this move. If we'd seen this a little bit earlier, that would have been a bit more helpful, but we do have a 20-50-day positive crossover. There's still plenty of upside potential here, I think, on this one with the upgrade. And I think did I have one more? Yes, HP in the tech field here. He recognizes that. Nice PMO buy signal here on the upgrade. We can see that the scooter is now moved up above the 75 line. We're kind of midway, though, already into this range that we got. But I didn't draw it in here, but you can see we're just past this area you could use as overhead resistance at these bottoms right there. So I think this one's pretty interesting. And look at the 20 is just about ready to cross over the 50. They're right now at even numbers, but I would expect to see that crossover. So 2 upside crossovers to the positive, I think looks pretty good. Might want to wait for that pullback, though.
Yeah, and I think HPQ also had earnings late last week. I think that's why we saw that big jump Friday, and then the heavy volume that came in as well. So got a little bit of stuff going on. Probably a few analysts now jumping on board after they came out with their solid earnings.
Yep, sounds exactly like what happened.
Yep,
and that's it.
Yeah, so that is it. Now we do have Monday setups, of course. Now last Monday, well, I think you were in Vegas last week, Monday and Tuesday, and of course Monday was a holiday, so we didn't really do anything with the Monday setups. But we'll go ahead and take a look at them today and give you some new picks for this week.
Indeed. Do you want to show?
Yeah, go ahead and why don't you take it away?
All right. Okay, so we can look at what happened to I'm going to have to sign out and come back in. My bad here on the low battery. I've got one of those new computers with like 2 outlets in it, and one is my screen and one is my sound. So I'll have to switch computers here in a little bit. So if I drop off that, then So I think our symbols last week were Cody. I think I had that 2 weeks ago.
Yes.
Yeah, actually, I think I put it in my setups. And I think I got it at 2012. And since then, of course, it was a great week. If we could have closed out last week, I think I've been doing much better.
Yeah.
But I think this one still looks pretty good. You got a flag. The 20-day EMA is holding, but I think I got in at 2012 on the Monday setup, and we are up slightly, but we really did have a nice move after that. And then what was yours?
I had Varian Medical, VAR. I think that was at 173.
Yep. And doing pretty good here. We've got, yeah. And again, I think if we'd stopped last week, we would have looked even more brilliant. But this flag looks really, really nice. So I don't think this one's over with either.
Yeah, and it's amazing how the market can make you look really dumb or really brilliant, just depending on what it does.
Exactly.
Had a nice rebound in the markets. That certainly helped over the last couple of weeks. But we showed, I mean, there are a number of stocks out there that didn't participate in this rally. Home builder being one part of it for sure. So it's not like everything's going up, but yeah, we had the tailwinds of the market the last 2 weeks for sure.
Exactly. All right, I'm going to go back to where I was. All right, so what I do, of course, for my Monday setups is run one of my millions of scans. I only have a handful, but today the scan I ran was pretty much the one that I have a link to at the bottom of the Market Watchers Live blog entries. I scanned on the S&P 500 and 600 though today, and I did not include the scooter. I only looked for a PMO with no crossover, but having risen for 3 days. And then I like to see a positive lineup of the EMAs so that I can expect bullish outcomes. So with that, I pared it down. I got about 25, and I've narrowed it down for you to 5. And I'll do my pick last. So let's start with Honeywell. All right. So I liked what you could make out as a possible flag, but the main thing is we got that we're getting a breakout above overhead resistance right now, and a very, very nice PMO coming out of oversold territory in a very deliberate fashion, giving us that PMO buy signal, like the OBV behind the move. And you can also see the scooters, while not above the 75 line, is still in a healthy area. So I thought Honeywell looked good. And also notice the 20-50-day positive crossover. That gave me an IT trend model buy signal. And the 5 has just crossed above the 20, and that gave me a short-term trend model buy signal. So this one definitely stayed on my list as potential. Illumina was another one. I don't usually have a whole lot of the big name stocks that come through, so I thought that was interesting that we got some. This was a nice breakout above that overhead resistance area, and you can see that it's holding so far above that area. So I like that. Again, you can make a case for maybe like a flag right here, or with the breakout. Mainly, I just like that breakout above that overhead resistance, and you can see we've got some upside potential here. Plus, it's already pulled back today. It's pulled back 1%. So that one looked pretty good. And of course, the PMO setup, the rising scooter, a lot of good stuff there. Priceline, that was my other one. And I really, this one I was really tempted to take, but I opted out of it, mainly just because I thought my pick was a little bit better than the setup here. But really nice flag. I think this looks really like your pretty much textbook flag. We're getting the breakout above overhead resistance that I've marked here in general from the gap back here, which has yet to close, by the way. I don't think, it hasn't closed yet. So we could be on our way to at least close this gap, and that would give you an upside target around 2,000. So I've got the PMO buy signal here, rising bottoms on the OBV. I'll be interested to see if we can get enough positive volume off of this rise today to get us above that previous OBV top. That would be a very nice confirmation of a breakout.
And Priceline also is one of the companies I just mentioned on the seasonality. Priceline loves January through April.
Oh, that's right. I'm going to just show it really quickly because, yeah, that one is a great one. So I'm going to go down here. So there's a lot of different ways to do it, but that's one way to get to seasonality. And of course, we always drag it out so we have the most data points possible. And yeah, I mean, February, March, and April, great time for Priceline. So the fact that it came up on my list, it's pretty much on yours, I would say, Tom, based on seasonality. So we're both liking that one.
Mm-hmm.
Yeah, let's go back. All right. And my next one, Watts Water Technology. The only thing I have to warn on this one, I thought this one looked really good, but I do see a rising wedge, and those are bearish formations. And while we've gotten a breakout, if you look in the thumbnail, it's been a real struggle. So I think, again, there's some pretty good potential here, but I would be a little concerned about this short-term rising wedge. But the PMO looks good. OBV is looking pretty good. And of course, the scooters staying right around that 70, 75 area. And that's always a good sign. So thought that one looked pretty good, but there might be a little bit of problem there, which is why I didn't pick it. So my pick, WRK West Rock Company. And here we go. All right. I've already got a breakout from the flag, so I like that right away. We've got the PMO is already clicked into that buy signal. While I would have liked to have caught it back here, this is when I ran my scan. So this is when it came up. But, with that flag executing there, I think you've got some really nice upside potential off of that. You've got an upside target, honestly, that is higher than 70 if you calculate the length of this flagpole and put it at the top. But I think if I owned it, I would be mentally having that target around 70 and then reevaluate and see what's going on. But look at the OBV, looks great. Scooters, again, staying in healthy territory while not, breaking the bank here and staying in the 90s. It's still very healthy. So I went with West Rock Company, WRK, and it looks like I'm going to get it at 67.07. And yeah, we have quite a rise today. So something to keep in mind. But if the flag has executed and it fills out as expected, we should break out and have a really nice ride to the top. But I would set my stop right here just below that support level at this previous top in December. And again, my target would be right around that 70 area. So we'll see how this does in the coming week.
All right. You got WRK in the books. I'm going to pull up a few stocks before I go into this week. So I'll just go through. This was a couple of weeks ago. I'd given a number of stocks as.
Oh, and by the way, I'm going to dip out here and.
Okay. Yeah, I had given a couple, well, probably about 6 or 7 stocks, I think, a couple of weeks ago as opportunities perhaps to play a bounce. And so you're going to see it was February 12th we did our last setup. So these were the candles on February 9th that I've kind of highlighted. But you can see VAR, which was the pick that I had for the Monday setup, had come all the way back down to this price support and gap support area and printed a reversal. I love to see these false breakdowns with these tails that go down below support, then coming back up and holding it into the close. I think that a lot of times that's accumulation on the part of market makers. At this point, I think Varian's rebounded nicely and is sitting in a flag off of an uptrend. Be looking for a close over 122 to confirm the next breakout. And we're right up against that level currently. Let me keep going here. There were several others. I'll try to go through these pretty quickly. Costco, you can see again, look at the candle coming down into this gap support zone. Looked like, again, we're getting that breakout, or excuse me, breakdown, but then we came back up. We held. Nice move up to the upside. You can see the long tail mark the short-term top, and then we've just kind of gone into the little cup here as opposed to the flag that we saw on Varian. But I think this one continues to look very bullish as well. Next up is PRGS, Progress Software. A huge move up. This was earnings related. Came all the way back down into this gap support zone. You can see a doji printed right on that 50-day moving average. Again, that was right before the February 12th. Got a nice rebound, got up almost to 50. I think, again, we're sideways consolidating, but so far holding that rising 20-day moving average, which I think is bullish. Then we've got PNC Financial, had a really nice bounce, of course, with the yields that were going higher. Many of the banks did well. You can see PNC actually made a breakout above the prior highs in late January. Struggling a little bit, but not much, considering that we've seen the yield come down 3 days in a row. I think PNC really is performing well on a relative basis. I think this is still a great looking chart. I would expect the rising 20-day moving average to hold here on any pullback for PNC. PTC, this one was one of the better performers. You can see making a breakout. I'd like to see a little bit more volume. Friday's breakout did not come on huge volume, so I'm a little skeptical. I might be willing to take some profits here if I was holding PTC, but I suspect a move back down to test the 20-day moving average would probably hold. The sixth and last one was McCormick and Company. I had previously annotated on this one. I think if I go back further, there was an ascending triangle on MKC that we broke out of with this heavy volume here. Went up, came all the way back down, really to gap support, and held. Again, there you can see that reversing candle, and now it is making its way back up. Looks to me like it's heading for 109 for a retest of that late January high. And now for this week, I am going to go with Snap as my pick. Talked about this one last week. It's still hanging down, hovering near gap support. I think this 1670 to 17 area will hold the stock. What I would absolutely love to see, well, maybe not in the short term, but longer term, would be one of those tails that we were just talking about where we come down intraday, take out these previous lows, and then come back up and close above it. I think that would mark a bottom. But I would be looking right around 17 for some support, and 2075 would be my target on a move back to the upside. Snap came out with earnings. That was the huge, big candle here that you see with the massive volume. That was earnings related. I think we've come all the way back down to the scene of the crime, and 17 and to 17 and a quarter, I think, is a really interesting area on Snap. So I'm going to go with it. Price at this time is 17.30, so that will be the price that I will use for our little weekly contests. A few other stocks, though, I thought I'd mention quickly. Then we'll bring Mr. Hopkins in. Urban Outfitters. Love this move up at the end of last week. Volume started picking up and was down earlier, but now it has moved to a new high. I like this sideways consolidation and then the breakout. You can see the PPO also just accelerating from a recent centerline test. So I like Urban Outfitters. I think this one will continue. And anytime you got a stock that's breaking out and the overall market is not, then you know you have a relative outperformer. Next up, Nordstrom's doing the same thing, making the breakout on Friday. Did pull back, but I think the rising 20-day moving average, if we were to get down that far, would probably provide some really good support on this one. And then the last one I think that I had, maybe, no, I might have two more. But TAL Education Group, you can see here, nice breakout, very strong move off the bottom. We were at 29, 28 and change a little bit more than 2 weeks ago. We had a beautiful rally, broke out, and I think this pullback, we're down 7% today on big volume, but in my opinion, we haven't broken any key support levels. And in fact, I think the closer it gets down to that 34 level, the better it looks on TAL. That's where we struggled here in 2018 to get through. Finally did. And now on a pullback, you can see that that rising 20-day is also at about 34. So I think the further it drops, actually, the better it looks from a reward to risk standpoint. And the last one is FLDM. This one I actually own. I did get it on the 20-day moving average. And you can see earlier today it got down as low as 680. It's 696 right now with the 20-day at 695. But this was a stock that a week ago was up over 8.25. So this has been a pretty nice pullback. Volume's been dwindling on the pullback. I think you got really good price support at about 675. So I would keep a fairly tight stop here. But I think this one's got a chance to make another run back up toward the upper sevens. And with that, we're going to bring in John Hopkins here in just a minute. This earnings spotlight is brought to you. But actually, let me go ahead and give you the summary there so you can see it on my symbols and also Aaron's. And with that, we will now bring Mr. Hopkins in. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com is a trading service designed to provide high reward to low risk trades. Strategy resulted in a 2017 risk-adjusted return that outperformed the benchmark S&P 500 fivefold. EarningsBeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. EarningsBeats.com, better timing, better trades. And with that, Mr. Hopkins, how are you doing today?
Hey, I'm doing pretty good. How about you?
I am doing great.
Yeah.
I mean, it's Monday. I mean, for a Monday, I'm doing great.
I'll tell you something. It's Monday. The Olympics are done. You know, there were some great moments, some disappointing moments, but nonetheless, you know, I always look forward to that. A lot of exciting things to watch. And it's always amazing to me how somebody can spend, 4 years prepping, and literally, Tom, in a matter of seconds, something happens and their hopes are dashed. It's just got to be, it's got to be great when you win a medal. But when you spend all that time only to be disappointed, it's got to be rough.
Sounds like a bad trade to me.
It sounds like a bad trade.
Do all that prep time and get this breakout, looks great, and then falls apart in 2 seconds. Well,
I think that's true. And I have to tell you right now, I'm very impressed with the market, the resilience here. But I also have to tell you that from our perspective at Earnings Beats, I think it's a time to be patient. And I had a webinar recently, and the focus was what I called extreme patience. And that's very difficult. When you see the market going up like this, you're saying, boy, I'm missing out. That's, killing me. But really, what have we done, Tom? What we've really done is we've made our way back on the S&P to the level, back on February 5th, just a few days before the market got pounded. And so I know it looks really good here. I'm not biting. And, if we miss a little bit here, I don't worry about that. I worry way more about getting involved in a stock at the wrong time. And the whole idea is to put the reward to risk on your side. And what I'm seeing in the stocks that I'm looking at now, the reward to risk is not there for us. So if this means we miss a little bit more, so be it.
All right. Well, I would take the contrarian view because I tell you, I think this market is not looking back. I don't think we're going back down to those recent lows. To me, I think the S&P 500, if we lost 2,700, I think that, and I'm pointing out the level here on the chart. I think if we go back below that level, we got gap support there. That was kind of a reaction high. We broke above it. We went back, tested it. Now we've moved to new highs again. I just don't see it. And I've said this for the last couple of weeks. Outside of the fear factor, the volatility index spiking, I just haven't seen anything in this market telling me that this bull market is ending. I look at a lot of things going on under the surface of the market, and I try to find, are we being led by defensive stocks, or are we being led by aggressive areas of the market? When you see the technology sector almost ready to break out to a new high, and the more aggressive NASDAQ and NASDAQ 100 outperforming the S&P and Dow, it just seems to me like the market is saying we're not done here yet.
Mm-hmm.
Now, I do think that we're going to consolidate. So I'd be really surprised if we just go shooting right back up through the recent highs to new all-time highs.
Mm-hmm.
But I think we're going to go back. I think we're going to get to the recent highs before we ever go back down to those recent lows. And like I said, I could be wrong, but 2,700 would kind of be my line in the sand. I wouldn't, if I was right now to try to gauge reward to risk, I wouldn't be looking at the high in January versus the low in February. I'd be looking at the high in January versus maybe 2,700. And so for me, I still think there's more reward to the upside than risk to the downside. But
well, let me give you a couple of stocks here.
Okay.
These are companies that reported earnings, beat the top and bottom line. They ended up on what we call our candidate tracker, which some people also refer to as a chart list. And excuse me, we've got about 180 stocks on there right now, and I've got 5 of them I'd like to go over with you. And when I talk about extreme patience, you're going to see what I'm talking about. But let me start with INVA. Here's a company that reported earnings, and you're going to see that we had a really nice reaction on excellent volume.
Mm-hmm.
Okay, and it's pulled back some, and it's sort of just hanging out. So you notice it's not really participating in the move like of the last couple of weeks. It's going the opposite way. But I'm not worried about that. Okay. All I'm thinking about is if I could get this thing maybe back to about 1540, 1550, I'd become interested in that because I'd have a stop around 1507 or so, which would be maybe a 2% downside, and a price target of 1685, which would be about a 9.5% upside move. So that's a 4.5% reward to risk. So to me, I'm if it just turns around here, that's fine. But I'm going to be patient on this one and see if we can get a little bit cheaper.
Yeah, and I think too, looking down here, you can see the RSI right after earnings. It looks like that went up over 70. But over the past couple of weeks, the market's been rallying. This one's been going the other way.
Exactly.
You might think, okay, well, that's bad. But I actually think it's good because the company needed to pull back. It was very overbought. And I agree. I think the reward to risk, for me, it's like that 20-day moving average, which is coming up pretty soon. 15.
Yes.
Pretty interesting.
Another one is Grub, G-R-U-B.
Yeah, this one's just been a crazy.
I mean, it's been a beast, right? And you can see, just look at that massive gap on, huge volume, right? But I'm gonna be really patient on this one because what we've noticed, Tom, over the years is companies that beat earnings and they just take off like this. When you see it, you sit there and say this thing's never coming down. It'll come down. I don't know when, but at some point it's going to come down. I'm going to start getting interested if it pulls back to the 20-day, and maybe even a little bit below that. Would be even nicer. I have a tight stop on it if it gets back there, and I think if the market continues to move higher at some point, this will go along for the ride. But in no way would I chase it here. I'm going to be very patient, let it come back to me, and I guarantee if it pulls back nicely, you're going to have a lot of interest on that pullback.
Mm-hmm. What else you got?
I got three more, real quick. INFN.
Okay. Yep.
There's a common theme, right? Earnings, blast off.
Oh yeah, that's my strategy. I mean, I
yeah.
From.
Yeah, and in this particular case, I'm going to wait to see at a minimum, if it pulled back to the 20-day, and I'd like it even a little bit cheaper. I like where you're pointing right there, maybe in an 8.25 range, with a really tight stop. Because if it falls below, you see the big gap there, right?
Mm-hmm.
So if it falls below that level, it could shave off some more points. So I'm going to wait, see if it gets back to that level. Try to pick up 10 to 15% on it, with maybe a loss tolerance of 3 or 4%, and that would give me a 4-to-1 reward to risk.
Yeah, I know on a stock like this, you look at it and you say, "Well, it's $10. No way is it going to pull back to 8.25 or something."
Yeah,
but and I don't know if this was one of them that you were going to talk about because I think we talked about this one a couple weeks ago, and I actually own the stock. But Snapchat, I mean, you look at Snapchat, and it's got this huge move up to 21 and change, and you think, well, it'll never come back to the 20-day moving average or this price. But here we are, two and a half weeks later. And that's exactly where we are. We're right back down to gap support and the 20-day moving average. So
yes,
patience does play a huge part in trading. I mean, if you find yourself chasing a lot, I think that
actually this Snap 2 is a trader that we put out last week, right close to where it is right now, and we've got a stop at I think 17.95, which is a few percent lower.
Hopefully it's 16.95.
16.95. Thank you. But if it turns here, it could easily get back to 20.5, 21, and that's just a tremendous reward to risk. We'll take a chance. Let me just end with this one, PAYC.
Okay.
Beauty.
Had a big move.
Not going to chase it. I'm going to wait, for this thing to pull back. Going to be really, really patient on this one. Love to see it pull back. 85 to 90, in that range, which again, at this point you say, there's no way it's going back there. It could easily get back there. I'll have a tight stop on it. Good reward to risk. The whole point here, Tom, is there's no need to chase these stocks that report earnings and do great. Let them run as far as they can. At some point, they get overextended. Traders take profits. They come back to really nice support levels. You keep a tight stop, what I call a defensible stop, where you can really justify why that stop, but you don't guess at a stop. You find a specific stop level and a price target, And if it works in your favor, the reward to risk is high, which is what we've consistently been doing.
Mm-hmm. Yeah, I mean, the thing is, if you're keeping that many stocks, 200 stocks or whatever on a list, and I have a very similar type list in my strong earnings chart list, um, they're not all going to go up and down together. I mean, you're going to have, because you're representing a lot of different sectors, probably all the sectors to some degree, many different industry groups. And when you look at the market each day, they don't all go up. Not all the sectors and industry groups go up. Some of them are pulling back while other areas of the market are going up. So again, if you focus on a large list and then maybe run scans against that list where you're looking for a 20-day test, or maybe one of the things I like to do is pull up stocks from that list that have RSIs between 40 and 50. Mm-hmm. That tends to be a time, where you'll get a pretty decent entry. I mean, if you look here at PAYC, that last pullback, when it got down into the 40s, you can see basically it established its bottom.
Oh, yeah.
When you get a stock that's uptrending, chances are many times when you look back, RSI 40 tends to be a great entry point into a stock like that. So try not to get it after it's gone up 10 days in a row. It's much better to get it after it's gone down 7 or 8 days in a row.
Exactly.
Testing a key support level, or maybe that RSI hitting 40.
All right. So anyways, our chart of the week, by the way, is the first stock I looked at, INVA. So anybody can go to the website. It's free, to get the chart of the week. And on there, you'll see I've got entry levels, price target, stop level. So if anybody wants to go to the chart of the week,
just fill out your name and email.
Yeah, fill out your name, put your email. Doesn't cost you anything. You'll be able to see what I'm thinking.
All right, sounds good.
All right.
You've been watching the earnings. I know I mentioned one earlier today. We just have another couple minutes here.
Okay.
I had mentioned one stock on here earlier today. I'm sure this will probably hit your list at some point, unless it falls apart later today. But Copart.
Oh, yeah.
Earlier this morning, this is a smaller company, but they had come out with really solid earnings today. 459 million in revenues. Market was only expecting 434 million, and then earnings per share came in 47 cents versus 38. But you can see off of a pretty nice move higher, put in a nice little gap, got up almost 51 bucks earlier, then came all the way back down to about 46 and change. Not only do I not like to own these stocks heading into earnings, but I don't like to trade them earnings day either, because there's just so much. You can see the stock has an 8 or 9% range today between its high and low. But I think what just about everybody can agree on is that the chart looks pretty good, having moved up. I think PPO looks good, great volume trends. They just beat top line and bottom line. So it's not a question of whether I want to own this stock. It's just what price do I want to own this stock? And I think, again, sitting back maybe with some patience, maybe this is one somewhere down the road you get closer to the 20-day moving average, or maybe the recent.
Love it there.
Yeah, so very interesting, no doubt about it.
Okay.
All right. Well, it's a pleasure having you back on here. I know we didn't get to talk to you last week because we had the holiday, President's Day.
Yeah.
So it's been a couple weeks, and I know things are probably going to be slowing down for you with earnings over the next few weeks, but hard to believe about a month from now we'll be talking about the next earnings season.
I'll tell you, it comes and goes fast, right? Just when you think, well, no more earnings, all of a sudden you're into March, and then you get through March Madness, and the next thing you know, you've got earnings. And I imagine, by the way, they're going to be good.
Yeah, I think, well, we're going to see. What typically happens from a seasonal perspective is the stock market does tend to move higher into earnings. If you look, the key earnings reports tend to start somewhere around the third week of January, April, July, and October. And the probably 3 to 4 weeks leading up to that,
mm-hmm.
tends to outperform, its average throughout the year. It tends to be much stronger heading into earnings as the market builds in solid earnings. Now, of course, when you're in a bear market, I think the market probably is pricing in poor earnings, but we have bull markets more than we have bear markets. So anyhow, we do tend to see a run up. So it'll be interesting to see if maybe sometime in March we start to make another push on the S&P 500 as we get closer to the earnings reports.
All righty.
Stopping by, my friend. We'll talk next week.
Thanks so much. Bye-bye.
There he goes, Mr. Hopkins from earningsbeats.com. You can go to earningsbeats.com, sign up for their free chart of the week. He said it was INVA this week, and I know he puts a new one out each week. But if nothing else, maybe you can be trying to develop that patience and waiting on some of these stocks to come back to support. They don't all work, by the way, because this is how I trade, and sometimes those support levels don't hold. But I guess the point is, do you want to buy it at the support level, or do you want to buy it higher? I mean, if it's not going to hold, I'd rather get it when it's down near that support level. But anyhow, I think we've got Erin back with us. How are you doing?
I am back, and I actually do have the RRG of our symbol. So I'm going to show that real quick. There we go. So everybody turned in their 10 and 10 symbols, and I got as many of them in as I could. But here's the RRG. You can see obviously a lot of them are mirroring or are relative to the S&P 500. They're very similar. They're all staying near the beginning or near the middle. I'm so sorry. But here's the list as far as who is leading, who is improving, and which ones are lagging. So I thought it was interesting. We didn't have any in the weakening category. That was kind of interesting. So anyway, let's go ahead and get started with Visa. V as your first one.
All right. I'm actually trying to get ahead of the curve here. And I was just annotating it, so let's move over and take a look at it. All right. First of all, Visa's done what the overall market's done. It obviously took a big hit here at the end of January and then into the first week or two of February. But like so many other charts, check out this long tail to the downside. This is when everyone was panicking. This is when the volatility index went to 50. Everyone was just throwing out stocks. They're like, okay, this is the end of the investing world as we know it. And then, of course, we got a bottom. That's what happens when everybody decides to throw in everything, even the kitchen sink. That's when we normally see a pretty good bottom. And so that's what we did with Visa. We've made our way back up. I think it's in a great space in the financials. So I suspect we're going to eventually make a breakout. Would I do anything with it right here? No, I'm sitting at 124. I've got resistance just below 127. And I think at this point, you might be able to use that rising 20-day moving average. We just bounced off of it, but that's down under 121. So even if I use the 20-day, I'm sitting here with maybe $3 upside, $3 downside. To me, it's just not a worthwhile trade. So I would just be in hold mode. I like the stock. I just don't think it's a great entry point right now.
All right. The next one I have for you is GBTC. GBTC.
Oh, Bitcoin. Oh, my gosh.
Yes, of course. We have to add that in here now and then, right?
Yeah. Right now, it looks to me like it's just kind of trapped between its two moving averages. We went down. We went below the 20. We came back up above it. And then you can see the recent pullback. We tested it. It held. So let's just move that right to there. And then on the flip side, though, notice where we failed on the last move up, right at that 50-day moving average. So I think right now Bitcoin is kind of trapped between, say, around $17 and $20. I'd like to see which way it breaks. If it breaks above 20, I'd like to see volume come in to confirm it. If it does get through 20, I think your next key area of resistance would be up here at about 26.5 to 27. So that would be the good news. Unfortunately, downside, if we fail to hold that 20-day moving average, we could get another test back down at $10. You can see we've been putting in lower lows, lower highs. And this high right here has not taken out the reaction high off of this low. So I think we're in a downtrend, at least over the past couple of months. So my gut feeling tells me we're going to break to the downside. But I would just respect this territory here between the two moving averages.
All right. Next one we have is Energous Corp, which is WATT, Watt.
Yeah, huge move up. Actually, I like this one. This came up on one of my scans recently. I'm not sure which one. But this was, I believe this was an earnings move to the upside. I could be wrong, especially being at the end of December, right after Christmas holiday. Usually we don't have too many earnings coming out then, but something happened here. And you can see that to the downside, we had pretty good support. I'll mark these two levels. First, the candle body right there, and then this intraday low. Anytime I get this kind of volume, and we were down to this 15.25 area and then reversed off of it, to me, that tells me we've got some pretty good buying and support there. We got close to that 15 and a quarter. We did go below 16. We started to bounce. I think off of this move higher, we could be turning up here, possibly to put in a cup or maybe to trend line resistance. Let me see if I can put in this other left side of the neckline right here. So here's the move up, left shoulder, neckline, a lower low puts in the head. We come back up maybe to about 24 and a half to test the right side of the neckline, and then maybe one more low. I like a 20-day test on this stock, so that would be something I'd be watching for on a pullback.
All righty. Next one, Red Hat, RHT.
Yeah, I like Red Hat. That's in my strong earnings chart list. Got to get a pullback on it. That would be the only thing. I'm not going to chase. So as John Hopkins and I were just talking about, really got to develop some patience here and try to wait and see if I can get this one cheaper. And they don't all come down. I mean, sometimes they just keep going and you wish you had gotten in. But the problem is if you get in and it does come back down, that's a pretty steep drop from 148 all the way back down to 135. You're going to be down close to 10% before you even get your first test of the 20-day moving average and price support. So I would have to wait on it. It's overbought. I think the chart looks great. I love software, but it's just gone too far too fast. So I'd have to put it on a list to see if we can get a pullback. And again, if you can get it back down anywhere close to that 20-day moving average, that's when I'd first start looking at it.
All righty. Before I go to the next one, there's lots of frustration going on in the chat room. Just want you guys to know it's nothing personal if we take your comments out. We love that you guys talk amongst each other, but a lot of times I can't see what the questions are or what some of the 10 and 10 are and that sort of thing. So be patient with us and know we don't hate you and we don't think you're offensive. It's just so that I can, Tom and I can see the questions and everything more closely. But feel free to chat amongst yourselves. Just don't get upset if we have to delete a comment just so I can see what's going on. So our next one is actually PetMed Express. And I must say that this one actually did come up on my scan today. I just thought there were better setups. But for whoever requested this one, I like it.
Yeah, I like it too. This one came out. This is on my strong earnings chart list. I've been waiting for this one, trying to figure out, exactly. It has this history of gapping up with earnings and then coming back down before it starts going back up again. We saw that back in October and now again in January with the huge gap up. Great news. And then it sells off for a few weeks and you can get it a lot cheaper. The problem is it's been underneath the moving averages. And now that it's gotten back up above the moving averages, I want to see it get through 48 because this was that first reaction high. So as it's gotten through the moving averages, I just didn't see a great reward to risk on it yet. But if we can get some increasing volume on this through 48, I actually think it's got a pretty good chance to make another push up toward that 56, 57 level. Very similar to what happened back in the latter part of 2017.
All righty. Next one is HUN. Huntsman.
Yeah, this is another one I think that just recently came out with earnings, and I think their earnings were pretty strong from what I recall.
Yeah, I just got a PMO buy signal on it, so
it may have been right here. It may have been this gap up. I think it was. I think the gap up was on Friday. They may have reported Friday morning. I think that it's come back testing the rising 20-day moving average. I think it's going to go back up toward that recent high. So I actually like this one. If I am correct in what I recall, in that it beat top line and beat bottom line, I think the gap up and this pullback to test this rising 20-day moving average is actually a pretty good opportunity with a fairly tight stop that you could put in play, maybe a close below 33. So I think this one, I think the reward to risk you could set up pretty favorably.
All right. Next one, T. Rowe Price, TROW. I just got a PMO buy signal on this one, or it looks like it's getting ready to have one.
Yeah, it's another stock I think that's in a really good space. It went a little deeper on the selling than I would have liked because I would have been looking at price support right here, and you can see we definitely went back down below that. But there are multiple support levels. There was certainly a breakout there. You got reaction lows there. I mean, there's a lot of different support areas. The bottom line for me is that it's in a good space. I like the financials. So I think the pullback was probably a little overdone. And I think we're going to head back up to test the 120. So for me, it's just, can I set up a trade that gives me a solid reward to risk? it's got to be at least 2 to 1, and I prefer getting even more than that. Meaning that if I'm sitting here at 113.58, my target's 120. That I've got what, $6.50 to the upside. That means I don't want more than 3.25 to the downside, which would be about 110 and 110.33. And you can see my moving averages are at 109 and change. So I'm going to have problems with the current price setting up a solid reward to risk trade. So I like the stock, but I think I'd have to get it on a little bit of weakness down closer to the moving averages to set up that reward to risk properly.
All right. For our Canadian friends, XEG.TO, which is the energy ETF. I did just get a PMO buy signal in oversold territory, but I'd beware of that 50 below the 200 personally.
Yeah, this one, I was really surprised by what happened with energy kind of falling apart. But you can see that once we moved up above the 1140 range, we went down, we tested it, got up to 1290, all the way back down to 1140, almost to 1290. And then we came back down, we lost this support area, and now we're coming up from underneath, and we've got to get through. So I like the fact that we're getting through the 20-day. That's the first step. But I think a close, I'm going to say 1145. I'd like to get that closed. And if it does that, especially if there's decent volume, then maybe what I would do is consider using the now rising 20-day as a closing stop, because I don't want to go all the way back down to 1060 on this trade. So I'd have to keep it fairly tight. So I'd be using this as a bottom, and the 20-day moving average would need to hold as support.
Okie dokie. Next one is PBF. It's another energy exploration production, but this is NYSE.
Yeah, very similar to what we just looked at. I do think we got a decent divergence on this one. So I figured I'd just draw this. Technically, it's not a positive divergence because we don't have a lower close. If you're going to have a positive divergence, you need a lower close. But we do have kind of equal price action off of this downtrend, and you can see that the PPO has started to rise here. So I think we've got what I would consider at least a changing of the guard in terms of divergence. I think momentum is starting to build a little bit more on the bullish side. And I think we've got a chance to go up and test the 50-day moving average. We'll see if we can get through there. But for now, where I would trade it is between these two moving averages. Either wait till I can get a breakout above the 50, and if I was going to trade it, it would be very tight. Wouldn't wait too long to the upside, probably take a couple percent and be out. And to the downside, I'd have that 20-day moving average as my stop.
All right. I'm wondering if people used my scan to request today. Lots of good PMO setups on the 10 and 10. BlackBerry. I think I picked this one back in January at some time. I can't remember.
Yeah, BlackBerry right before February 12th when the overall market bottomed, I think put in a really nice candle right here. You can see it taking out those prior lows. And I can draw that support area from this prior bottom. But it went down just beneath it, reversed up, put in a hammer, and has been moving back up through its moving averages. So I think overall it looks pretty good. Again, it depends on how much room you want to give BlackBerry. Do you want to trade this as though, nice volume on Friday and we moved back through the moving averages? Do you want to keep a fairly tight stop at the moving averages? If so, I think this is a strong reward to risk trade. So I could keep my 20-day or my stop at the closing stop at the 20-day moving average with the idea that I'm going to ride it back up to the 14.5 area. I think that would be a really strong reward to risk. Now, if you're not going to trade it that way and you're looking all the way back down here at this support level, then you're not looking really at a huge reward to risk trade. And if I ever did that, I would consider getting in 2 entries. So, and I'm not saying that's what I would do here, but to try to improve my reward to risk, if I was literally going to hold as long as BlackBerry closed above, say, 1115, I would only buy half here. And if it did move back down close to this area, which, if I predetermined that was going to be acceptable to me, I'd buy the rest of my shares as it got down to the support area. And then you're averaging in maybe between $11.75 and $12, which if you have a target of $14.50, it makes a lot more sense. But anyhow, BlackBerry, I think, looks kind of interesting. I like that volume coming in on Friday.
All righty. That concludes the 10 and 10. So with that, you can see all of the stock symbols. I think we're going to have those up here. And there they are. I will get those up as soon as possible after the show so that you can view all of Tom's annotations right there. And with that, I'm going to grab the screen again. Want to talk to you about ChartCon, of course. We're going to mention this every day. I'll just keep it to a minimum, but we do have a lot of new people here. ChartCon is coming up in August, and there you go. You can get to it from stockcharts.com/ChartCon. It's August 10th and 11th, and you do not have to travel to it. It's very similar to what you're doing right now. You can watch it in webinar type format live, and we do interact with you and all of that. It's a great conference. You can see we're going to talk mostly about risk, so you can register there. And also, we are still taking VIP reservations, and you can find that down here. We'd love for you to come and actually attend the conference and have a front row seat, meet us all. I can't wait to meet our VIPs. I really am excited about that. And then if you want to really add on some fun, we're all going on an Alaska trip cruise, and we'd love to hang out with you there. So consider a VIP ChartCon event, or just do this online with us. I would expect everybody who's here in the audience to be signed up if they haven't already signed up to do this. So anyway, I'm going to move on to our market update very quickly here. And here we go. I like to go over to the candle glance to give you guys the best view of what's currently going on. I'm going to add the TSX here. There we go. And you can add anything you'd like in here. So as we can see, nice gap up. Markets are continuing to move up slowly, but we are sitting near intraday highs for all of the major markets. Russell 2000 as well is making new intraday highs. Look at TSX also following suit with a nice rise after a gap up. Treasury yields, we were dropping this morning as we started the show here earlier before the show, but now we are starting to see them rise slightly, but we're still down. Treasury yields still reading at 28.57 currently. We can see UUP really choppy trading today, pretty much in that neutral position. If you ask me, it spent just as much time above yesterday's close as below, but currently down 1 cent. Commodities moving up, formed a nice flag there, and you can see we've got the similar situation going on with USO. I'd like to see that flag, would look for higher prices off of that in the very short term. We can see that gold spent much of the day after making an intraday high, has spent the majority of the day falling back down, but it did find some support on yesterday's close, and it is making its move back. And you can see if I were to draw a declining tops trend line there, we have seen a breakout on gold. And we can see as far as the volatility index, it's reading lower, right around 16. So we're seeing a little, we're seeing less concern about the market. A lot of the fear factor is definitely moving back down. And let's go ahead and go to our market summary, get a quick peek at what's going on internationally. Make sure I have this going the right direction, and also what our sectors are doing still. Technology, financials, those aggressive sectors still on the top. Industrials up over 1%, as well as healthcare. Only laggard today is the utilities ETF XLU, down 0.36% currently. As far as our industries go, hardware, airlines, networking, those are all on the top, up over 1.5%. And of our industry groups, the only one down right now is utilities. So following suit, of course, with sector spiders. International ETFs, we can see Russia and Hong Kong both leading the way, up over 1.25%, with Russia up over 1.8%. Mexico is the only laggard. Malaysia is unchanged. So the two of them, of all of our international ETFs, are the laggards. We'll go back very quickly to the member homepage and look at our scooter movers, just so we have an idea of what's going on with them. These are the big names right now that are leading the scooters with 99.9. Pretty much all of those above the 99 level. You can see which ones are have the best batting average, is what I call it. And there we go, HP. We looked at that earlier. It did get an upgrade today, and so not a surprise to see that leading with a big scooter move up almost 19 scooter points. And with that, that completes our market update. Did you have something you wanted to add to that, Tom? Or not? Okay. I will go right on into our DecisionPoint report. All right. So what I want to start with, of course, is Carl's weekly wrap. He does this on Fridays. It's a great starting point for me to do the DecisionPoint report. As I said, I am having a little bit of disagreement with Carl right now, but as far as the overall market, I think we're on the same page mostly. Right now, he's pointed out a bullish flag. And of course, we know from trading today that we have broken out above that. And of course, that's a very bullish sign. And typically, when you have a flag, you expect after a breakout, a move up that is the length of the flagpole, which of course would put us well past our all-time highs. And we can see the PMO is moving upward in terms of its lows, the bottoms. We don't have a crossover yet, but that looks pretty good. He was pointing out this reverse divergence, meaning that volume didn't help that much, I guess, to support this particular move. And I'm going to move over to my charts now. All right. Ultimately, Carl, after looking at all of the indicators and such, is still leaning bearish right now. I'm starting to lean more bullish at this point, mainly because of that flag formation and the nice breakout today. Of course, he didn't have the benefit of knowing that we were going to get the breakout, but you can see that PMO not only turned up, but again, like I said, we have rising bottoms. We're just about ready to hit a PMO buy signal. So I think all of that looks pretty good in the grand scheme of things. And at this point, I did point out that now that the 20-day EMA is, or the 50-day EMA is beginning to rise, the 200-day is rising as well, but we're now going to start seeing them diverging, not converging, and that's a good thing. So we want to see both of these heading higher, which is what we're getting at this point. Now, I know I've been looking for a retest of these lows, and you know, I don't think we're completely out of the woods for that, but the indicators right now are not supporting that, and the breakout from this flag formation is not supporting that. All right, I'm going to look very quickly at IJH and IJR, the S&P 400 ETF, and you can see we've got that flag, haven't really broken out of it, and it's sitting right, the top of that flag is right on overhead resistance that was formed back here at that December top and these December tops as well. So I don't like the look of that, but we did just get the 5-day EMA crossing above the 20-day EMA, and that is a short-term trend model buy signal. We also see the PMO is just about ready to generate a PMO buy signal. We got that breakout on the scooter, and we're seeing it maintain in healthy area, not above average, but healthy at this point. So I think that when you look at the mid caps, we're still looking pretty good. I'm a little bit concerned that we haven't really broken above that overhead resistance, but with the S&P 500 looking pretty good, I'm not quite as worried about it. But we're also seeing the same kind of action here with the S&P 600 ETF IJR. Again, we haven't quite broken out above this area of overhead resistance, which could be considered a problem. Although when I look in the thumbnail, I do see that we're currently trading above what could be considered the flag on this particular flagpole. So we haven't gotten over that overhead resistance just yet, but we have a 20-50-day positive crossover. That gives me an intermediate term trend model buy. See, the 5 also crossed above the 20. So that's a short-term trend model buy. So everything's starting to really turn over as far as our EMAs. And the PMO is looking pretty good here. As you can see, we've got a PMO buy signal that's already come through now for the S&P 600 ETF. Looking at the very small caps here, Russell 2000. Again, with all of the small cap, mid caps, we're still not seeing that breakout above that high we saw back in December. But these highs back here at the end of December, we have finally punctured, and we are heading higher. I think you could drag this down just a bit to see that we're getting the intraday high is peaking just slightly above this previous high back in December. But you can see that nice PMO buy signal as well in IWM. And the SPY and the others, the other big indexes, we haven't quite seen that yet. Those buy signals haven't quite come in yet. Although I do believe I had a signal I'm going to write about after the show. As far as the NASDAQ is concerned, we did get that PMO buy signal coming in. We'd already gotten the short-term trend model buy signal, but we did get a PMO buy signal coming in on Friday for the NASDAQ 100. So I will be updating the DecisionPoint scoreboards at the time. So let's go ahead and start looking at the climactic indicators. These are useful for your day trading kind of situation. I look at these, it's like candlesticks, which is why I have candlesticks on this. I'm looking for information over the next day or two. That's what these indicators give me. And I know this isn't useful to some of our traders out there, but I like to know what to expect during the day. And what we can see, again, there's that breakout above the flag formation. So we've got that breakout. But what I wanted to point out was that on Friday, we got these very high breadth readings. And, you know, when I get climactic readings like this, I look and determine, am I looking at an initiation or am I looking at an exhaustion? And the way I figure that out is by looking at what action, price action, has been occurring before these climactic readings. And so when I see that, it was in a decline, but we did get the move upward. So I would say this is likely a bullish initiation. So I would be looking for higher prices. And had I written this on Friday, that's what I would have said. And so I would have been right. But of course, I didn't write it down. But that is what my analysis would tell me, was to expect higher prices over the next day or two. We're getting that today. I'll have to see what these climactic readings look like later. I like to use the VIX when I can, looking at where it is in terms of the Bollinger Bands, but it's still mostly in the middle, so I don't find that information useful to my analysis of this chart. So I really was only paying attention to these climactic positive readings on the breadth. So let's move to the short-term indicators. Short-term being days is sort of how I look at the short-term. I consider it in terms of days. And as you can see, we're seeing these indicators did pull back on the consolidation, which is what will happen a lot of times. And so that was good. And we can see they didn't hit negative territory, which is good. And they are decelerating, which is good. However, they are still heading lower. This zero line, I think, is going to be very important. I want to see it turn up. That would tell me that we're looking at some internal strength in what's happening in the market. I'm showing a little bit of strength just by the fact we're seeing some deceleration here on these particular indicators. So we'll be watching these closely, as I usually do. I'll be writing about them on Wednesday. We'll see what has happened to them at that point. But when I look at the short-term indicators, I would call them neutral to possibly bullish. Now that we look at the intermediate term indicators, I need to set this up so you can see this without white space. My bad. I'll take it in a little bit. All right, so what I wanted to point out, and it's mostly, it's easiest to visualize the fact that we do see our intermediate term indicators rising. They did have a kind of a bear kiss, a bull kiss, I guess what you could say. It came down, kind of tried to fake out some of us, and now it is moving back up. So I would say intermediate term with these rising indicators looks bullish. So that is my thought, and that's where Carl and I differ a bit. But I do see his point when you look at the weekly chart for the S&P. His point is that we are seeing the PMO moving downward and looking for a PMO sell signal. With today's move, it did make the PMO look a little bit healthier than it did on Friday. But I think that, again, with the benefit of today's readings, it's easier to see this as a little bit more bullish rather than bearish. His thought process as well was that we have this declining PMO nearing a PMO sell signal. And his thought is that after this parabolic move, that this isn't really enough to flesh it out. So he's still expecting a downturn, but as he says, a lot of that's his experience and analysis as far as what happens after a parabolic and what's going on with the PMO sell signal. I'm at this point on the opposite fence. I am feeling much more bullish about the market, and I see his point. I could definitely see his point, but I think for me, I would be leaning more bullish than bearish at this point. And it's funny because we always hear that Aaron, you're just like a perma bull. Well, I don't think so. If you've listened to the show, you have to know that I'm not. And my dad tends to be more bearish, and I think that's true to some degree. And I don't know if I think it might be a matter of history and what he's seen versus what I have seen over the years. So I take his advice very seriously, as I think everybody should. But I will tell you that looking at that market, I'm not as worried. All right, let's go through the big four very quickly. He currently is bearish on the dollar, and I am feeling bullish at this point. We've got a PMO buy signal. We got that bulk hiss. We're heading back up. I'm looking at a double bottom. I think he has a good point, again, that we really haven't been able to get up here and pop up above that neckline. And his other point is that when you look at the weekly chart, right here, you've got that sell signal. And again, you're not seeing that area of overhead resistance being broken just yet. You could make a case also for a reverse flag. But when I look at the daily chart, I still think we're doing pretty good here. I think we have that opportunity. We've got that move, that gap. We didn't come back immediately, so I'm not looking at it as an island reversal. The 5 just crossed above the 20, giving me a short-term trend model buy signal. So I am bullish on the dollar. And because I am, this is something you can consider as well, is I'm looking at the correlation between the dollar and gold. And currently, we are seeing a very high inverse correlation, meaning it's highly correlated, but in the negative direction, meaning they're going to travel almost directly opposite. And that's what we've been seeing here lately. So I'm bullish on the dollar, which means I'm likely going to be bearish on gold. And that is correct. And I know Carl is also not feeling very comfortable about gold either. We have a double top. I would expect at least a test of this neckline here. I would expect at least that test of the neckline. And we're not quite there yet. Again, you could make a case for a reverse flag in there if you want for short term. But I think this double top is really key. And this area of support at that neckline is going to be very important. Notice the 5 and the 20-day EMA. We almost have a negative crossover, and that would put us in a short-term neutral position because that negative crossover is occurring above the 50. So it would put you in a neutral position. So for now, looking at the way we got that bear kiss with the PMO, the decline on the scooter, I'm still bearish on gold. And that really kind of makes sense, right? Because the dollar I am bullish on, and currently there's a negative correlation, a high negative correlation going there. All right, USO, oil. And I think oil's looking very encouraging. We got the breakout, and I had mentioned, I think last week, that I wanted to see that breakout above the 20-day EMA. We got it. We've now broken out above this previous low right here. I would say I would be looking for a test up here at that 1325 range. Look at a nice healthy PMO. We can see the OBV volume. bottoms are moving higher. So I think all of that is very positive for oil. So I am bullish on oil currently. And on TLT, on bonds. This one's a little tough at this point for me because I haven't liked it. I haven't liked bonds in a while. And, we did get this bottom that actually lined up nicely with the bottom of this gap down. And we closed it with that move. And now we're moving higher. So to me, with the PMO turning up, and price moving higher and getting above, bouncing off of that gap support there and closing it, I think is positive. But, we've got overhead resistance coming up here now at 119. Yes, we have an oversold PMO that is rising, but we've been faked out before on the PMO, but it is quite oversold. I think a trip over to the weekly chart might be useful, and then I will pass it back to you, Tom, so that we can close this up. But for now, you can see why I'm still concerned about TLT. We have that PMO sell signal. Look at the thumbnail. I mean, the weekly PMO is just free falling lower. You could make a case now for a flag starting to form on that weekly chart. So I'm still not convinced that we're looking at something good for TLT just because we got that bounce. I think at this point we're going to have to watch and see if that area of overhead resistance at these previous short-term tops and the two I'm looking at back here from March. So we'll have to wait and see if it can't do that. Another thing, the 50 is well below the 200-day EMA. So I really should start expecting bearish executions to patterns, bearish conclusions. So that's more likely to happen at this point. So I am leaning toward the fact that bonds are not going to be doing so well. So with that, let me give you my quick summary here. Bullish, bullish, bullish as far as my indicators are concerned. So I'm starting to feel more bullish about the market. The big four, dollar I'm bullish on, and gold I'm bearish on. I've got my targets up here. I will post this chart in the Market Watchers Live blog today. Oil I'm bullish with a target around 13.25 currently. I think bonds are encouraging and some support is holding, but I'm going to sit in neutral on that one. And away we go.
Awesome. Very good update. Yeah, I mean, right now, market doing extremely well as we get close to the end of the show here. We do have the Dow Jones right now at its high of the day, up 366 points. The S&P's up 25. NASDAQ just went through 7,400, and even the Russell 2000 trying to finally play a little catch up, up 7 points. So pretty good action in the market today. I've been waiting and waiting and waiting for a day where we'd finally get some afternoon buying. We saw that on Friday, so I'm not at all surprised that we're seeing some follow through.
What's your take on the dollar and gold? I'm kind of curious.
I am very bullish the dollar at this level, although I'd keep a tight stop. I think if the dollar goes below 88, I'd have some problems with it. The dollar index, dollar USD.
Yes.
So that's the level I'm watching. I think too, with that bouncing, it's going to make it really difficult for gold.
Yes, exactly. And like I said, the correlation right now is pretty high to the negative side. So they're traveling almost completely opposite.
Yeah, it's I think there was a positive divergence I saw on the dollar chart, and even with the dollar falling as precipitously as it did throughout 2017, gold did not outperform the S&P 500. It really struggled on a relative basis. So if a falling dollar, a dollar that fell, the index fell about 13 or 14% in 2017. If that doesn't wake up gold on a relative basis, I'm just not sure what will. So I just have to see more strength and some relative strength coming into gold before I would consider it.
All right. Excellent.
Yep. And we got a great week coming up. The rest of the week, I'll let you go through that, but with some great guests coming in.
Oh, I know. I'm very excited. So tomorrow we have Bill Shelby coming downstairs into the to come visit us on the program. And Mark Chaikin is going to be here Wednesday. I just can't wait to talk to Mark. He is the creator of the Chaikin Money Flow Index, among others. So we'll be talking to him about his indicators. And Mr. Wyckoff, Bruce Frazier, will be here on Thursday to talk about what's been going on in the market from a Wyckofian perspective. So it should be a very interesting week. I'm going to be coming up with a workshop for Friday. I'm not sure which one I'm going to do yet. So I'll take your requests in our survey. So
absolutely. That's where I picked mine the last couple of times. I think it's an awesome way to, just put your voice in there, and, maybe Aaron will pick your topic. But if you go to the lower right-hand part of your screen, how'd we do? There's a survey, a little link to a very quick survey. And if you fill that out and include in there, something about the PMO maybe that you're unclear of, maybe, like I said, Aaron will pick that for her workshop on Friday. Do want to thank everybody for stopping by and being with us today. Do please remember to complete that survey as you exit. We do love to get your feedback and hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we'll see you back here on Tuesday. Happy trading.